Throughout your working life, you've paid tax. You pay tax on your salary. You pay VAT on items that you purchase. Capital gains tax on certain assets that you sell. You pay tax when you fill up your car. It's been tax, tax, tax. And at retirement, SARS is a special way to tax you. Throughout my professional career, I've helped my clients save well over 100 million Rand in tax with this technique alone. The question is, how much of your retirement capital do you want to give to SARS when you retire? Hi, I'm Devan Naika, Retirement and Investment Specialist at Retirement Wellness SA. I specialize in creating personalized solutions for retirees and helping them live the best life possible with the money they have. Before we begin, I need to share with you some of the challenges that I faced while creating this video. Some of my fellow colleagues said I'm crazy to share this information. They said if I share this information, how would they justify their fees? Or what would be the need for clients to want to engage with a financial planner? And guess what? I'm sharing it anyways. Because I believe that the value of proper financial planning extends far beyond some tax solutions. In fact, the information I'm about to share with you today, although it's epic, is just a fraction of the skills I possess when conducting proper retirement planning. Please post your comments below and let me know if you think I'm crazy. One of the main reasons that I want to share this information with you is that I often have retirees contacting me after they've retired, when they learn that I'm a specialist, when they learn about my tax skills, and they ask me for assistance to recover the tax that they paid when they retired. Hundreds of thousands of rands. And I can't. No one can. Once SARS issues a directive, it's final. It cannot be changed. It's cast in stone. So I want you to pay close attention. Even if you are not retiring right now, take the time to empower yourself with this knowledge. Now I know you're probably wondering, what does all of this have to do with the woman smelling roses? Well, in a little while, I'm going to share with you why knowing that women smell roses could potentially save you hundreds of thousands of rands in tax. Let's start off identifying your cash lump sum. Assume you have 2 million Rand in a pension fund, 2 million Rand in a retirement annuity, and 2 million Rand in a preservation fund. Now, you are entitled to 1/3 of this as a cash lump sum, and in total, this is 6 million Rand. If you have a provident fund, or if you have a preservation provident fund, the chances are you have an opportunity to withdraw all of this in cash. I'm going to assume that you're going to take 1/3. I'm also assuming that you are 55 or older. So let's get back to the example of the 6 million. 1/3 of the 6 million means we're dividing that 6 million by 3, and that is 2 million Rand. The balance, 4 million Rand, is going to be invested. And on that investment, there's no tax. Look out for a future video, which will help you understand the income options that are available on that 4 million Rand. Now, SARS uses the retirement fund lump sum tax table to tax this 2 million Rand. Please make sure you're viewing the latest tax guide when you're doing this. I'm using the tax guide that was applicable to when we shot this video. What we can see here is SARS adopts a sliding scale on the tax. And what this means is, the more that you take as a cash lump sum, the higher your tax. From 0 to 500,000, the tax is 0. From 500,001 Rand up to 700,000, the tax is at 18%. And from 700,001 to 1,050,000, your tax is 27%. And at 1,050,000 above, your tax is at 36%. Often people think that they have more than one 500,000 tax-free amount. So if you've got a retirement annuity, you have tax-free 500,000 there. If you've got a pension fund, tax-free 500,000 there. That's not the case. SARS combines all of this, and they regard it as retirement fund lump sum values. Let's get back to that example of 2 million Rand. That's the 1/3 amount that you're taking in cash. What we can see is it's more than 500,000, it's more than 750,000, and it's more than 1,050,000, which means the tax is 130,500 plus 36% of whatever is more than $1,050,000. Let's first calculate how much is in excess. 2 million rand minus $1,050,000 gives us 950,000. That 950,000 times 36% is 342,000. Now please be careful. That's not the total tax that you're going to pay. Because what it says is 130,500 plus whatever is more than 36%. So it's 130,500 up here plus 342,000. The total tax you'll pay is 472,500. How much will you receive in cash? 2 million rand minus 472,500. And this is the amount that you'll get in cash. So what can we do to avoid this? Well, here's the secret. The easiest way is to draw a lower lump sum. So initially we worked on a lump sum of 1/3 equal to 2 million rand. Looking back at your 6 million rand, what if you took 500,000 as a lump sum? Now the entire 500,000 will be free from tax. What that means is, of your 6 million, 500,000 will be paid to you in cash, and 5.5 million would now be invested. Both amounts will be free from tax. But it's not as simple and straightforward as that. Taking 500,000 means you're going to have a smaller amount of cash in your bank account. You cannot take a lump sum from the 5.5 million that you're investing. You might have a bond to settle. You might have a car to buy or a car to pay off. You might want to travel, or you might want to do some renovations. And is 500,000 really enough for you to do all of that? I also have to look at other factors. Sometimes it might be better and more feasible for us to take a larger amount in tax, especially if you have debt. In that case, I look at the amount of interest that's being charged on that debt to determine whether this would be a better route for us to settle. There are other cases where we deal with very wealthy individuals retiring with large sums of money. And there too, it might be more tax efficient for you to withdraw a larger amount in cash and pay some tax. But again, it's not a simple and straightforward decision. I need to look at your specific circumstances and take everything into account in order to guide you in the best way forward. It's best to have a professional to handle this, someone who's experienced, someone who's done this before, someone who can help you identify what the optimal amount that you need to take as a lump sum. Once this decision is made, it cannot be changed. At Retirement Wellness SA, we work with just 2 new retirees in a month. This allows us time to get to know our clients and offer them the maximum benefits. We strive to eliminate fears and encourage your dreams. This personalized service is not for everyone, and we have a specific profile of client that we deal with. To see if we're going to be a good fit for you, please email retirewell@retiresa.co.za. But hold up, this is not the end. In the second video to follow, I'm going to be taking you through some fine print that's going to throw everything that you've just learned out of the window. Now that you've learned the secret, I want you to share it with your family and friends and those whom you feel may benefit from this. We can all play our role in helping others. If you enjoyed this video and you found it helpful, please click the thumbs up. Remember to subscribe so that you get to know when we are producing future videos. And please post your comments below and let me know if you found this helpful.
This episode was proudly brought to you by Z360 Productions. Build trust in the marketplace by producing high-quality graphic and video content. We deliver to your inbox on a monthly basis. Contact Z360 today.